What if the two most disruptive technologies of our time, artificial intelligence and blockchain, join forces to redefine the entire financial system? Imagine a world where decisions are made in real time with laser precision, where fraud is nearly impossible, and where financial services are truly decentralized, transparent, and intelligent. That world isn't science fiction, it's unfolding right now. From Wall Street to Silicon Valley, from your mobile banking app to global supply chains, the integration of AI and blockchain is gaining momentum. This dynamic duo is pushing the boundaries of what's possible in finance, streamlining operations, enhancing security, eliminating intermediaries, and unlocking brand new ways to interact with money. But how exactly do these technologies work together? And why is their combination so powerful, especially in the financial sector? To answer that, we first need to break down what each technology brings to the table, then explore what happens when they're fused together. At its core, artificial intelligence refers to the ability of machines to mimic human cognitive functions such as learning, reasoning, problem-solving, and decision-making. In finance, AI is used to power everything from predictive analytics and algorithmic trading to chatbots and personalized customer experiences. The more data AI consumes, the smarter it becomes. That's its magic and also its limitation. Because to make intelligent decisions, AI needs data. Lots of it. Clean, accurate, real-time data. And this is where blockchain comes in. Blockchain is a decentralized ledger that records transactions across a network of computers. It's transparent, tamper-proof, and permanent. Once a record is on the blockchain, it can't be altered. That means it can be trusted without needing a central authority to validate or oversee the data. So while AI is the brain, blockchain is the memory. One is intelligent but needs truth. The other is truthful but needs intelligence. Together, they're unstoppable. Let's look at some real-world examples to see this in action. Take fraud detection. For instance, financial fraud is a massive global problem. Credit card scams, identity theft, and fraudulent transactions cost the industry billions every year. Traditional systems are reactive, responding after fraud occurs. AI, however, can analyze vast amounts of transaction data in real time, spotting patterns and anomalies that suggest fraud before it even happens. But what if the data it's analyzing isn't clean or trustworthy? That's where blockchain comes in. With blockchain, every transaction is recorded immutably. The system knows exactly where the data comes from and whether it's been tampered with. AI algorithms working on blockchain-backed data can detect fraud with a much higher degree of confidence and accuracy. Another example, smart contracts. These are self-executing contracts with the terms directly written into code, hosted on a blockchain. Enter AI. It can assess market conditions, analyze risk, interpret legal language, or predict behaviors all in real time. Pairing AI with smart contracts enables more sophisticated, adaptive agreements that can respond intelligently to complex scenarios. That's not just automation, that's intelligent automation. Now let's talk about lending. Traditional lending models rely heavily on credit scores, which can be outdated or biased. Millions of people around the world are credit invisible. They lack the formal history to qualify for a loan even if they're financially responsible. AI can solve this by evaluating alternative data, mobile phone usage, utility payments, online behavior, even social signals. But again, there's a trust issue. How can a lender be sure the data is accurate and hasn't been manipulated? Blockchain ensures that this alternative data is verifiable and auditable. It can establish digital identities and financial reputations that are secure and portable. In effect, AI can score more people more fairly, and blockchain ensures the scoring process is based on truth. Beyond lending, consider trading and asset management. High-frequency trading algorithms already use AI to execute thousands of trades per second based on market patterns. But AI doesn't just follow rules, it learns. Machine learning models get better over time as they're exposed to new data. Blockchain can enhance this by providing a tamper-proof record of all past transactions and market behavior, which AI can analyze to make more informed decisions. Also, decentralized finance or DeFi is one of the hottest trends in blockchain. It allows people to lend, borrow, and invest without traditional banks. The DeFi platforms often suffer from volatility, scams, and complex interfaces. AI can stabilize DeFi markets by predicting and managing risk, automating compliance, and enhancing user interfaces. Together, AI and blockchain are making DeFi safer, smarter, and more accessible. But it's not just about what these technologies can do, it's about what they represent. Blockchain is about decentralization. It shifts power from centralized authorities to the network. It's about trust, transparency, and security. AI, on the other hand, is about intelligence. It's about making sense of the chaos, finding patterns, making predictions, automating the future. When combined, they create a system that is both smart and trustworthy. Decentralized but intelligent, transparent yet predictive. And that's a game changer for finance. Let's not forget about regulatory compliance, a huge pain point in finance. Financial institutions spend billions annually just to stay compliant. AI can automate know your customer KYC checks, flag suspicious activity, and generate compliance reports. Blockchain can provide regulators with a real-time audit trail that's transparent and immutable. This combination reduces costs, increases efficiency, and minimizes human error.